Welcome back, folks. Dow right now is up $1.45. You get the NASDAQ up 45. S&Ps are up 12. Let's go over to the NADEX platform. We'll take a look at this oil market, see where we're at here.
So, Wednesdays, 10:30 a.m. Eastern Time, right? You got the EIA numbers coming out. Oil's had a little bit of volatility already this morning. Even just back up the chart a little bit. We had the API numbers last night around 4:30. I believe that's, yep, there's the bars. So trading a little bit lower, but higher we go. We're almost up at $64 as of yesterday. So we have about 11 minutes until those inventory numbers come out. We're trading at 63.11 currently. And to get in here, first spreads I
Pretty good. There's a 63 there. Yeah.
That's, yeah. So first spreads I jumped to are the 11 a.m.s. Okay. Now I say 11 a.m.s. They go from 9 to 11. They expire at 11 a.m. The inventories come out at 10:30 a.m. So you're going to have a half hour of trading after those numbers come out. They're each $1.50. So you have your 63 to 64.50 for your bullish trade. And you have your 63 down to 61.50 for your bearish trade. Now if you're trying to trade volatility, you're buying both sides. The bullish trade is going to have your 8 pennies to the upside of intrinsic value,
right?
Plus your premium you're paying. So on the bullish one, that's going to cost us about $23 or 23 cents above the floor of that at 63. Bearish one's going to have no intrinsic value because you're kind of 8 or 9 pennies out of the money, and it's just going to have the premium. So it's going to be about 15. You're looking at $38.
Okay.
Call it, you know, with commissions, $40, which would be
4 pennies. Yep.
40 pennies, right?
Yep.
40 pennies,
40 pennies, yeah.
Away from the $63 that you would need. So that's why a little bit bullish because you have a head start of 7 to 8 pennies on the bullish side. Now, before we dig into it too deep, let's just see where. Oh, you know what happened here too? I'm going to just jump back because I've had this up, and anytime you do, I had it up all morning,
yeah, right,
and so I just need to refresh and pull it up, and there we go. And that way, all I'm doing here is I'm making sure I load. You refresh because I had it up since before 8 in the morning.
Right.
The noon ones open at 10, right? They set every time. So we're going back into commodity spreads. We're going back into crude oil. And there are our noons now. And so they're going to have a slightly different point. Now, what's interesting here is these start at 63.25.
Yeah.
So on this one, your bearish trade is going to have some intrinsic value.
This is really cool, actually, because, you know, if you're just going for volatility, well, that's one thing. But if you're going for volatility, plus you have a little bias, you have both bullish or bearish.
You do. Now, these go till noon, so you got that extra hour as well. But let's say you were bearish, okay? The bearish trade this time is going to have your intrinsic value because you have value from 63.25 down to 61.75.
Yeah.
You'd be selling this position. This one's going to be your expensive one because this one you have 15 cents of intrinsic value, so you're paying $15 for that value that's already in there. And on the bullish side, that's the one that you're completely out of the money. Yeah. So it's a very similar $15, $16 because it's just premium. So this one's costing you 46. Last one was 38, right? And this one does have a little bit of a head start to the bearish side if you're going to make that trade. And with that right now, again, oil's trading about 63.12. And before we jump in, let's just see where the 230s line up. So the 230s have that same 63.
Yeah.
Now these are $3 spreads though, right? Let's just close these, make it least confusing as possible. 63 to 66 on the bullish side. Again, the bullish one has the premium, the intrinsic value. You'd be buying that, so it'd be about $30 to the upside. Same price, 63 down to 60. You're selling that one. Now that's interesting. Only that, you know, that's going to be $49, right? Yeah. So, and that gets you not only the 11 a.m. was the 11 a.m. Right. This one gives you 3.5 extra hours.
Yeah, and more money.
But it also gives you $3 of potential movement as opposed to $1.50. And that's not out of the realm, especially not out of the realm with inventory coming at 10:30. Oil's been pretty volatile.
Yep.
And you have until 2:30. $49, so you would need, call it 50 cents a movement away from $63 to break even.
Right.
Yeah.
Let's bring that up.
Go for it.
What we got here. So now this is delayed quote. It was 63. Oh, it's right. It's pretty close to where it was.
And I just wanted to make sure that we were on the same. I believe we are, but yes, it's the April contract. I just wanted to make sure as you jump into it. Go for it. Yep.
So let's see what we got here. Yeah. So
where are we going?
Yeah, no, totally. It looks like we're going higher, man. Okay, let's take a look at this intraday. See if this, the spike is up there. Oh, this is interesting. So you had the spike down, but it didn't break the swing. Spike down
there's
yesterday.
some big movement.
11:30 yesterday.
Yeah. Even if you bag it up, was that during the 10 o'clock? When was that first movement? Yeah, 10:30. I was doing the show with Basil yesterday, and I was just pointing out that as we were talking about it, it was quite an acceleration. Quite an acceleration that we were getting. Not really off news driven, but they were selling there for sure, and then it continued during the 11 o'clock hour as well.
I'm not going to do it, but I'd have a bullish bias right now.
Okay, so let's just jump back, though, with the bullish bias.
That number is what, that's 63.44, the high. Okay, that's still not enough movement, though, too, right?
63.44. Yeah, that would be pretty close. That's just over break even for the 11 AMs, right?
Yeah.
And it's actually under break even if you're trading the 230s.
Okay.
But that would be the trade that you'd most want to look at, because at least you have your intrinsic value that you start off with on the bullish side.
In this case, that's 19 cents, which is pretty cool.
13 cents, right? Excuse me, 11 cents. It's trading at 63.11. Is that what you said?
Yeah.
And
I see. Yes.
So it starts at 63.
No,
that's the 11. The bullish ones start at 63, and the bearish ones, their point was 63.25.
Right.
But give or take, that gives you a good feel for where the market sets up the price. So again, you know, the 11 AMs were about $38. The 12 o'clocks were about 46, and then going back to the 230s, which are back to bullish, had about 48. So anywhere between 40 cents to 50 cents of movement in either direction, and you start to break even. And then, you know, you can always trade both sides of that as well. You get 50, 75% move in one direction. Maybe you close out that directional trade and look for the bounce in the other direction, especially maybe if you have the 12 or the 230, where there's enough time for that market to turn around before expiration.
I just want to see what these big oil and gas stocks are doing. Okay, so they can't handle price either. They've been, on a longer basis, these things want to go lower. So we'll see where this shakes out today. But that's quite a hit that they've taken.
So we'll jump back into it. News comes back right at 10:30. We'll see where those trade.
Yeah. Welcome back, folks. We got crude inventories rose 3 million barrels.
Yes, gas inventories rising about 2.48.
Big numbers, man.
Yeah, and I believe the expectation for the median analyst estimate was right at around 3 million barrels. Now, what's interesting here, scrolling down, this is the Bloomberg live feed. You had in here that the Bloomberg users were predicting a 400,000 barrel compared to, now maybe, I think that's, you know what, that's the API expectation. That's all that is. Bloomberg was looking for 400,000 versus the API came in at 933. But either way, so median estimate was 3 million barrels, comes in at 3.02, not bad. And let's just pull up. We're going to jump back in here. We're going to jump into our commodity spreads, crude oil. We'll jump into the 11 AMs first. And let's see where we're trading. No, we're getting some price action. There we go.
Oh, smoking.
Smoking. So now again, to remind what we're looking at.
Oh, it's just down 50 cents like a heartbeat.
For sure. So it was at 63.12.
Yeah.
Right before that, right?
Right.
Our bullish trades were starting with a floor at 63.
Right.
That was the 11 AMs or the 230s.
Yep.
The one bearish trade was going to be, now not one bearish trade. These are all getting into,
right.
The 12 o'clocks would have given you the option.
Biased to bearish.
Exactly. The 12 o'clocks would have given you an option to have 63.25 being your So to pull up that, so here would be your bearish spread in that trade, right? 68.325, and this would be, you would be selling this. So right now, if you wanted to buy that back, you would be getting $60 back immediately.
Right.
And that was going to cost us about 46, I believe.
Right.
Total for the two contracts, correct. Now, what's cool about that is that, you know, let's say you want to immediately, because we've seen it now, it doesn't look like it's going to stop just yet as that's accelerating, but you could close out that position. You take your, as it keeps rocking, you take your $65, right? You maybe profit $20, $15, $20, whatever it is. And then you still have exposure if in the next hour and a half that it trades above 63.25, that your bullish position is still open. Because realistically, that doesn't seem like it was a huge dramatic miss off of the median analyst estimate.
Right.
But interesting and always nice when you get some price movement, especially when you're making volatility trades.
This is big price movement,
covering both sides of the market.
Look at the size of those bars.
Oh, definitely. And it's even more intriguing when you look that we were just at 63.40. We're now almost a good dollar, solid 80 cents from where we were just at 9:30 in the last hour.
Yeah.
So we'll check back in on it. Definitely some action in the oil market for sure. Let's jump back to oil real quick and take a look at where we're trading right now. So it
Look
is
at that.
continuing to cascade
Wow.
down. So again, we started about 63.12 before the EIA numbers came out, down about almost 90 pennies from that level. And if we had taken the bearish noon trade, we would be almost at a full dollar, which would be $100 at this point. 63.25 down to 61.75. You can buy that back right now for $92. We're putting up about 46. Now, just to put things in context, though, even if we went out to, let's say, the 230,
Yeah.
which would have been our 63 to 66 on the bullish side, we would have had about a 12 penny head start to the bullish side, and we would have had a little bit of room to make up on the bearish side. And this, this one was going to cost us, what was it, $60, I believe?
I think closer to 50.
50?
Yeah.
Yeah, you
Yeah.
could be right. Either way, no matter what it was, my point's going to be that 71.
You're still making money.
Yeah.
And
you should be for
and you get to 2:30 in the afternoon, though.
Exactly.
This is
Exactly.
this could be quite a day inside the oil market.
For sure, man.
Right.
It's amazing that we've been hanging above $60 for a long time in oil now.
No, it is.
Yeah.
There's
It's kind of
no
become
doubt.
the new norm. $50 was the norm for a while.
Yeah.
$60 has become the norm for a while, but guess what? That might not be the case for
No, it's not stopping, man. This is
It's
not stopping.
It's not.
No.
Yep.